Welcome back, everyone. We have an update from Vista Gold Corp. It trades on the New York Stock Exchange American under the symbol VGZ and on the TSX under the symbol VGZ. Holds the Mt Todd Gold Project, an advanced development stage gold deposit located in the low risk, Tier 1 mining friendly jurisdiction of Northern Territory, Australia. Please welcome CEO Fred Earnest. Welcome, Fred. We're excited for your update today.
Thank you. It's good to be back. It's an exciting time. I know that there's a lot of things going on in the gold space. I will be making some forward-looking statements, but just to move along quickly, for those who may be new to the story, in July of this year, we announced the results of a new feasibility study that demonstrates a very achievable path to near-term production at our Mt Todd Gold Project. And as indicated, it's located in the Northern Territory of Australia and what the Australians call the top end. It's only about 250 kilometers from Darwin and about 30 minutes from a regional community commerce center called Catherine. This is Australia's second largest undeveloped gold project. It's the largest undeveloped gold project not held by a producer, and we're excited to be the owners of that project. The feasibility study that we completed is at a scale of 15,000 tons per day. It incorporates the Australian principles of fit for purpose design. And while it's initially staged or designed at 15,000 tons a day, we've preserved the opportunity for and the option for expansion. We're going to talk a little bit more about this, but we've prioritized grade over tons. And another objective was to significantly reduce the initial CapEx. I'm happy to report that the project economics are very strong and that they support a near-term production decision. Digressing for a moment, as indicated, we trade on the NYSE American and the TSX under the symbol VGZ. We have 125 million shares issued and outstanding, $13.2 million in cash, and we have very strong leverage to the gold price. And you see some of our largest shareholders off on the right. I'm going to leave that for those of you on the call to read and digest or come back to. What I really want to get into is the study itself and the results of it. This study, whether you want to call it turning a new page or a paradigm shift, we've charted a new path for value realization. And since announcing the results of the feasibility study, I think we've already seen the first steps in that value realization. We went from our last feasibility study that evaluated a 50,000 ton per day operation and had $1 billion CapEx with about 395,000 ounces of gold produced on an annual basis over the life of the project, to a project that's less than third the size. We've achieved a 59% reduction in initial CapEx. We'll talk a little bit about those results here in just a moment. As I indicated, we prioritize grade. The average grade of the deposit has come up from 0.77 grams per ton to 0.97 grams per ton. We've adopted what is in Australia a very common practice of having contract mining. And there's a very competitive industry centered around contract mining in Australia. We continue to have third-party power generation. We've been able to stabilize the gold production profile over the life of the project. Previously, we had very high production in the early years, middle years, very low production, and then high at the end. I'm happy to say that now the production schedule is such that we have 175,000 ounces of gold expected in the first 3 years, and then 150,000 ounces of gold per year constantly over the next 15 years. We've adopted another Australian practice of having a fly-in, fly-out workforce. This comes with some cost and includes camp as part of the initial CapEx, but it's a way of minimizing the employment and the staffing risk, and it's a very common practice, and that's another significant change. Now the results themselves, as indicated, we've prioritized grade. The average grade of ore to the plant over the first half of the life of a 30-year project, in other words, first 15 years, is 1.04 grams per ton. That's a significant improvement from where we're at. We already talked about average annual gold production, and the initial CapEx is now estimated to be $425 million. That's a huge drop from the $1 billion plus that we saw previously. Our reserve has dropped from 7 million ounces to 5.2 million ounces. That's part of a change that's resulted from raising the cutoff grade. We had a 0.35 gram per ton cutoff grade previously. It's now 0.5 grams per ton. It allows us to get better grade material to the plant. And I'm still very happy that we have a plus 5 million ounce reserve. It's still a very respectable project. The economics of the project were evaluated at $2,500 gold price, way lower than where we're at today. And at that gold price, we had an after-tax NPV5 of $1.1 billion and a nearly 28% IRR. At the time that we published the results, our gold price was just a little over $3,300. And then looking at the project at $3,700, we have a $2.7 billion NPV5 and over 50% IRR. This is still a very, very phenomenal, very solid and strong project. The all-in sustaining costs are just under $1,500 life of mine, and for the first 15 years, just under $1,450. The cutting right to the chase, what's the value proposition? Well, when we compare the Mt Todd project and Vista Gold to the Australian junior gold producers, we see that we have a larger reserve, we have more production capability on an annual basis than any of them, and yet our valuation is significantly less. At a very minimum, we would expect to see our market cap, our valuation come up to something on the order of Catalyst at close to $1 billion. And aspirationally, we think that we could achieve something closer to Capricorn, which would be another 2 or 3 times that. So there's a tremendous opportunity here as we move the project from this new feasibility study toward a development decision and ultimately into production. Last of all, and this will be the last slide I share, just to recap, we've designed this as an Australian project for near-term production. We think that it's a very attractive development option, smaller scale, higher grade to the mill. We've reduced the CapEx significantly. We've stabilized the gold production profile. The economics that we've just talked about speak for themselves. We've preserved the opportunity to expand it. We don't expect that this project will run at 15,000 tons a day for 30 years. And we've reduced development and operating risk by switching consultants, using engineering firms with proven track records in developing mines in Australia. We've changed to contract mining. We've switched to a predominantly fly-in, fly-out workforce. And lastly, I'm happy to say that the study has opened doors to various different development options. So with that as kind of a recap, let's go ahead and take questions that those on the call may have today.
Okay, perfect. Thank you for that. So the results of your new feasibility study have been very well received by the market. On the day you announced the feasibility study results, Vista's share price was 93 cents on October 8th. It hit a high of $2.46. So tell us more about the value proposition and why investors should be interested in Vista Gold at today's share price.
Well, that's a great point that you brought out those share prices. That on July 29th, the gold price was $33.24. And on October 8th, when we hit the high price of $2.46, the gold price was $4,044, almost exactly what it is today. When we look at net asset value per share at a $2,500 gold price, it's $8.80. So if we look at it at a $3,300 gold price, the price that it was when we announced the study, that's $17.60. That's almost 10 times more than where we're trading today. And so when you look at this project, and I know that people are panicked about the gold price, we still have a phenomenal gold project. And what I would just encourage people to look at is take a pause, take a deep breath, and look at the value of the project and realize that there's tremendous intrinsic value at Mt Todd. Nearly 10 times what we're trading at today. There's tremendous value opportunity here as we move this project forward and we move into production.
Well, wonderful. Fred, we are out of time, but we do have lots of questions for you, so we'll send them to you. But great. Thank you for joining us and great news.
Thank you very much. It's good to be on the show again.
All right, everyone. We'll be right back.